Money Masters and Treasure Hunters, welcome to the June 28th Fantastic Friday edition of today's Closing Bell on the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom today, along with my partner here, David White. David White, how you doing this afternoon?
Fantastic.
And folks, if you're not familiar with us, Dave hosts a fabulous radio show each day here at TFNN from 2 to 3, the Power Trading Hour. He's also author of two fabulous newsletter services. One's a daily service called The Path of Least Resistance and a weekly service called The Technology Insider. Later on in the show today, we're going to be talking about all kinds of technology. More than that, David is the lead artist. I mean, he's the Rembrandt, the Picasso, the Monet, the Salvador Dali, any other artists that I've left out there. He is the lead artist. He's all wrapped up, our lead programmer in creating the art of the timing the trade charts out there. And it's a charting package, folks. It is one of the best charting packages out there. I mean, it's not just a charting package. It's a Gartley and butterfly scanner. It's a swing point finder. Tell you what the volumes are at the swing points. You've got the proprietary indicator, the power law vector indicator. No one else has that. You can only get that here at TFNN. How about the double repo program?
Well,
I mean, that's a
pattern.
The pattern that's out there.
Yeah.
I mean, it's got everything that you could absolutely want, folks. And you want to make sure, because this is the end of the special promotion that we have here at TFNN. And so now is the time for you to get over to the homepage at TFNN.com and sign up for the Art of Time of the Trade charts.
Yeah, I don't know what people are going to do if they're in their car now, but maybe they're going to turn the water on or flip a light switch, and they're going to know it's that time to go right to the computer and sign up for the Art of the Charts. It's the last day, and a 30-day money-back guarantee. If you don't like it, you get your money back. But this is it, and the prices are going to go up significantly. You got a 50% discount for this early promotion that we're having on the Art of Timing Trade charts.
And folks, I would never ask you to do anything that I wouldn't do or buy anything that I wouldn't buy. And I can tell you that, when I started learning technical analysis, it was really Tom O'Brien and David White that were key and integral to that part. And David had created the original package, which was, what was the name of that one?
Timing the Trade charts.
Timing the Trade charts, okay. And that was how I was able to really learn what was inside Tom's book.
Right.
And so if you're anywhere near that, and look, even if you're an excellent trader, this software package will help you up your game. So in any event, we'll talk more about that later on. If you're not familiar with me, I kick things off here at TFNN each morning. The first
Lead off.
I'm the anchor.
Lead-off.
I am the leadoff batter. I get everybody on base. And what I do is I don't tell you where the markets are at. I mean, we tell you where they're at, but I tell you where it is, things are going, and why out there. Also, I've got a newsletter service called Mastering Probability. And every now and then I put together special reports that are really key. These are special reports that you want to make sure that you've got to print out, and they're part of your arsenal. There's another one on the homepage of TFNN.com right now. It's called The Trend is Your Friend Until It Changes. So you want to go over to the homepage after you have signed up for the Art of Time of the Trade charts. Then go ahead and download my special report out there. But enough about us, folks. Let's go check out these markets out here. Right now, we had the Dow finish down 115 points. It was a wild ride in the market. We started off this morning at about 10 o'clock. We were down about 100 points. Went back to maybe positive for just a few moments and back down. So it is the Friday roller coaster. In the summertime, people like to go to the amusement parks. And that's what we actually had out here. We also had the S&P finished down 7 points. The NASDAQ Composite up 1. That was in the green. It finished out at 3403. Russell 2000 off a couple of points at 977. The NDX, the NDX 100, that was up 2 points. The New York Stock Exchange finished down 30 points out here, but it still had net advancing issues, 50 points. So we've got a little bit of divergence in the marketplace. For those of you that, listen to my shows in the morning, yesterday I was taking a look. I always like to understand who's got possession of the ball, the bulls or the bears out there. And yesterday, as long as the Dow had finished up above 15,019, I believe it was, it showed that the bears had fumbled the ball. And today, in order for inside the Dow, for the bulls to retain control, they needed the Dow to finish above 15,000. Well, folks, it finished at 14,909. The only hope out there is really the New York Stock Exchange, because the oscillator went above zero yesterday. The summation index ticked up yesterday. It's going going to stay ticked up here today. So it's the wider breadth of the marketplace that there's a little bit of imbalance here. But right now, quite frankly, you've got the S&P, summation index, still ticking down. You got the Dow that just gave the ball back to the bears out here. So Monday should be a wild ride as well. But let's go take a look at the actual charts. Let's go see where we finished out and what it may be doing out here. The S&P 500 closing out the session here at 1606.28. Now, it really was an inside day inside of the downdraft bar out here that is trying to deal with, which is June 20th. The top of that bar we have not seen yet. The top of that bar is 1624.62. You also, this is possible. Now, with giving the ball back here to the bears today, it is very possible that yesterday set up the C point of a larger A to B equals CD down. And if that's the case and you want to know where that is going to, inside the S&P 500, what you would use, we'll take the conservative approach here. And the conservative approach says we would take a look at the June 18th high, which is going to be 1654. We're going to come down to the swing point that came in on Monday, that low in the S&P, 1560.33, and yesterday's high. Now, as far as retracements, probably about a 60% retracement out there. 1-to-1 would take you down to 1526. That says it's going to come back, and it will test the area of April the 18th out there. That swing point low, 1536. So that is absolutely a possibility with the Bulls fumbling the ball today, and it was like it was 3 and out here. They had 3 plays, they used them all today, and they just simply had to punt the ball, and they gave it back to the Bears. That's on the Dow and the S&P 500. Let's go take a look at the Dow itself. The Dow finishing down today, a total of 114 points. Let's go see what it is doing inside its stock chart out here, as soon as we can find that. The Dow closing out, as I said, at 14,909. In order for the Bulls to retain control, it really needed to close above 1,500 out here. So it's very possible that what we saw yesterday was the C point of an A to B equals CD down. If that is the case, the A to B, the 1-to-1 A to B equals CD down, inside the Dow would take you into about 14,285. That would be your 1-to-1. Let me see what else we have. What other friends does it have at the 14,285 level? Looks like that would be a retracement coming off of your swing point here from February 25th up to the high that was put in on May 22nd. That would give you your 0.786 retracement level. Now, we are in the unfavorable seasonal cycle out here. And what that says, my study, in fact, if you subscribe to Mastering Probability, or if you'd like to, there's a two-week free trial. Now, I've never done that, folks, a 2-week free trial out there. Normally what I do is David, I've got this personal philosophy. I never ask anybody to do anything that I wouldn't do. Mm-hmm. And I know that when I pay for something, I pay attention. So that's why I've asked folks when they sign up for my newsletter service, just put down a deposit. You can get it back completely, very much like in the case of the Art of Timing the Trade charts. Okay. And we want you to actually be able to use it out there. And that's the best thing, because there's so much knowledge that you impart on people inside your charting package and charge your newsletter services, just as I do. But we do have a promotion here running where you can test drive, even if you have subscribed to my service before and you didn't extend it beyond the first 30 days. You can re-sign up and test drive my service for the next couple of weeks.
They're going to get a second bite at the apple.
They do. Well, because we never had that program before. From a program, because you would understand this from a programming standpoint, the back door is open. There's no way to say, hey, you can't try it out. So, take advantage of that, folks. You got to take advantage of those little bugs out there. Now, speaking of bugs, let's go actually check out the big fly that hit the windshield today. And that fly was IBM. Let's go take a look at IBM. I mean, that was a big fly. Now, the cool thing about this chart, we got the IBM chart up here right now. Today, down with volume, gap down with volume. Total volume today was 9.5 million shares. Now, IBM had gapped down on April the 19th with 18 million shares. So you got about less than, half of that volume. But I'm going to pull this chart back here. Now, is this a beautiful chart? Look at that consolidation pattern. This is a consolidation pattern, folks, that goes all the way back to January 20th, 2012. So we're now about almost 18 months or so into this consolidation pattern. What that really says is where IBM is headed to is going to head down to the bottom of that consolidation. That's going to be right around the price level. Put 185 on your, jot that down on your pad, folks. And so IBM will head right down into about the 185 level. Now, if it busts that out, with consolidation, consolidations are some of the coolest patterns out there. And the reason that they are is because when you get a breakout, if it's a real breakout, what you're going to see is you're going to to see the equivalent price move, equal to or greater than the actual consolidation. Well, in the case of IBM, your consolidation goes from 185 at the lows, and on a conservative basis, we'll say it's around 210 at the high. So you're looking at about a 95-point, we'll just call it a 100-point consolidation altogether out there, which is a big move. It says if IBM actually breaks the consolidation to the lows, it'll run to about $80 out there.
So you're looking for that November 15th low to get tested.
Absolutely.
Okay.
There is no question. 877-927-6648. This is the Tom O'Brien Show. Your guest hosts, David White and Steve Rhodes, filling in. Give us a call, folks. We'll be right back.